Well, my name is Rostyslav Averchuk, or Rostyslav Averchuk in Ukrainian, and I'm currently based in Lviv. I have a BA in Philosophy, Politics and Economics from the University of Oxford, and currently I'm studying for a PhD degree in Finance or Economics at the Lviv University of Economics and Trade. And I'm also interested in a variety of topics in Ukraine's economy and politics, so I'm also a guest editor at VoxUkraine, an independent analytical platform which has been created by a group of economists who work in Ukraine and abroad. This article was a direct response to a previous article on FDI which was published by the Financial Times, and I was a bit surprised to hear that the main focus is actually on the Russian aggression when it comes to FDI, because the authors claimed that the Russian aggression is actually the most important obstacle to attracting foreign direct investment in Ukraine. And while I agree that yes, it's a huge risk factor, I wanted to underline that even before the Russians started their aggression in the east of the country, the FDI in Ukraine was very often not of generally foreign origin. And I wanted to stress that it was probably mostly, the capital of Ukrainian or Russian origin, which was masked by creating special purpose entities, tax havens in Cyprus, in British Virgin Islands, in Belize and other countries. I also wanted to avoid becoming too optimistic, because I heard some Ukrainian politicians say, okay, you can see that FDI in Ukraine have started to recover. And they forgot to mention that this FDI was actually of Ukrainian or Russian origin. So I just wanted to be a bit more cautious in speaking about the FDI, and I wanted to underline that the main obstacles to the foreign direct investment existed before the start of the Russian aggression in the East, and they continue to exist even now. If you look at the graph of the foreign direct investment inflows in the country, there is no clear pattern, there is no clear trend. So it's like jumping all the way up and down over the course of Ukraine's independence. But certainly, because of the war, which started in 2014, the FDI decreased dramatically. It was an unprecedented drop. For example, in 2014, the FDI dropped actually tenfold, so by 10 times, from $4.5 million per year to $410 million in 2014. In the next few years, it's increased. So, for example, in 2015, it was about $2.3 billion. Then, in 2016, it reached 4.4 billion USD. But unfortunately, if we look closer at the numbers, we see most of this investment actually came into the banking sector, and it was actually the recapitalization of the banks that already existed in Ukraine and needed desperately new inflows of capital to survive. So it was a common effort of the foreign owners and the EBRD, which tried to pool resources together and keep them working. And if we speak about 2017, we have the recent data speak about the first half of this year, and the foreign direct inflows were quite low, very low, and it amounted to $1.1 billion US, which is lower than last year. But there is an optimistic note here. The lower share is actually attributed to the banking sector. So more money has come into the real sector of the economy. So it's a good sign. It's a good thing. Well, I think we shouldn't expect the FDI to reach the number that we saw last year. So it will be definitely lower than 4 billion. I think the trend will continue. So it will reach probably $2 billion in 2017, and will keep increasing gradually. Well, one risk factor, which is still huge, is the behavior of Russia in the east of the country. investors are very cautious, certainly. They keep an eye on how things are developing in the East. Well, there are some fears that Russia still controls the separatists in the East, and it can increase the pressure on Ukraine, scare off investors. But on the other hand, the good thing is that Ukraine has improved its economic situation dramatically. So it has avoided becoming a failed state. And this is a huge failure for Russia. Because, yes, macroeconomically, the GDP has started growing. So, for example, this year it's projected to increase by 2% by the World Bank, or maybe even more. We see that the international reserves of the central bank have been growing. They have reached $17 billion at least. And the inflation is in control. The currency rate has stabilized. We see that macroeconomically there are signs of improvement. Parts of the Ukrainian government have started developing a really sound policy. So, for example, if we look at the central bank, at Ukraine's central bank, it has a huge task ahead of it of reforming the banking sector in Ukraine. But it proved to be quite a reliable institution. So, for example, we had a huge problem with Privatbank, the largest bank in the country, which had to be nationalized because of the bad quality of its assets. And it was done really good, really well. So we haven't seen any major disruptions. We haven't seen any hits to the currency rate. We haven't seen our population panic. So it's good. We also see good signs in the energy sector. We see that the state-owned enterprise Naftogaz is managed very well. It has managed to actually turn to the surplus. It was always a huge problem for Ukraine because the deficit of Naftogaz was one of the black holes of the Ukrainian economy where the government kept pumping money in without any result. Now it's been reversed. So we see some places in the government which have actually some good people and some good sound policies. So this provides some hope. The good thing is that investors have become less pessimistic about the investment climate in Ukraine. So there is a good investor survey, a very recent one from the European Association in Ukraine, which shows that, for example, only 17% of CEOs of large businesses in Ukraine claim that there have been no fundamental changes for the better in Ukraine. And while the majority still sees the investment climate as being not so attractive in Ukraine, they expect it to improve in the next 6 months. So this animal spirits of investors is actually getting better. The investment climate is still seen as not very attractive, but things are going for the best, it seems to me. What do the trade agreements, free trade agreements do? They open the markets. They make good, developed, large markets more accessible to Ukrainian producers, and they also make sure that regulations, rules, relations in Ukraine and in those markets are becoming more similar. So definitely it facilitates, for example, export-oriented production in Ukraine. And we can already see some interesting trends, for example, in the west and in the center of the country. It hasn't been very industrial over the last 25 years, but now foreign investors have started opening quite large factories in the west, in the Lviv regions. We have seen France's Nexans and Japan's Fujikura open their large factories, and actually they produce electronic equipment which is further used for producing cars in the EU. And they definitely use the fact that the west of the country is closer geographically to the EU markets, and they definitely use the fact that Ukraine is becoming more open trade with the EU and its regulations are becoming closer to the EU regulations. I also feel that sometimes it takes quite some time for the direct economic effects to be felt by producers and investors. But there is a general feeling of the direction in which the country is moving. So all those things, free trade agreements with the EU, with Canada, maybe with other countries. All those things are just showing that Ukraine has changed its direction. It's moving closer to the more developed economically more developed countries. So it's a great sign for investors. Definitely, if we speak about some tangible steps, it's the privatization. Again, there is a very good article on VoxUkraine which deals with this question, written by Paul Thomas, a Kyiv-based economist. And he says that for the government in Ukraine, privatization has always been like just a small point in the budget, which is oriented towards getting more money, towards selling. And there has never been a strategy of maximizing the value that the state and this Ukraine can get from actually selling those assets, because lots of state-owned enterprises are not so attractive for potential investors in their current shape. But sometimes the situation can be improved. For example, it can be restructured, old debt can be written off, so that they become more attractive to investors. And such a policy is needed. So I just thought that Ukraine actually needs to make steps in all areas of Ukraine's economy to speed up reforms in all areas. And if we look at the basics, it needs to get more reform-oriented people, more qualified people into the state, into the government. And I think this is one of the things that have been missing in Ukraine's reforms. There have been some attempts at attracting young reform-oriented people who graduated from foreign universities, but corruption, low wages, complicated system, bureaucratic system have often scared them off. And only, I think, 2 days ago, the government has decided to actually create a reform-oriented divisions in each ministry, and to employ specialists in those areas by paying them good salaries funded by the EU funds. So this is a good sign, because reforms have to be made by someone, and those people have to know what they are doing. If the system remains old, no changes, then it's difficult to expect reforms. Well, I think one of the risks is that Ukraine is still dependent on debt payments. So it got its help from the West, from the international donors, from the US, from the EU. And in 2019, it will have to pay back a couple of $1 billion to the IMF and to other donors. And it will have to remain politically stable in order to be able to do this. It will have to speed up the economic growth in order to be able to do this, because otherwise it will remain hooked on those debt payments. I think there is a good article on VoxUkraine, again, written by Olena Bilan, a Dragon Capital analyst who closely all these developments in terms of risks in Ukraine's economy. In speaking about the reforms made, currently I'm somewhat optimistic, and I didn't want to underappreciate all the enormous work that is being done by various people in various government agencies, ministries, who are true reformers, who are working hard to make changes happen. But more needs to be done. We have a lot of things that in 3 years have not moved forward as much as we hoped they would do. For example, if we look at the pension reform, if we look at the land reform, so for example, there is still a ban on land trade in place, which is a huge impediment to the development of agriculture and also of any sector, because land cannot be used as collateral for getting loans. So we have a lot of problems. We have huge problems with the judicial system. It's being reformed, but it's moving very slowly. And the problem is that it takes a lot of time for all the positive changes to feed through to the economy, to the producers, to the investors, and to the general population. And currently, the level of pessimism among the population and the level of political support of the current government is getting lower and lower. So reforms have to be made more quickly. Thank you very much.